Hello, this is the medium and short-term analysis for AUD dollar. Let's start with the medium term on the weekly time frame, and here we can see that the market is inside of this downward channel marked by these dashed lines and has just hit the lower border of this channel. And I see two main possibilities on the weekly time frame. The first one is here, the inverted head and shoulders pattern that has not been triggered yet because the market has not closed above the neckline. And if the market will break this pattern to the upside, we can count on some upward movement. So this is a bullish pattern and bullish view on the market. Speaking about the targets after the breakout, if the market will really breaks it to the upside, we can have this as target, this area here, that is the conference resistance area, the yearly pivot point for the current year that has not been tested yet, and the market usually tests the pivot point for the period in the most cases. And also this will be the classical target of the head and shoulders, that is the distance between the neckline and the head counted to the upside at the point of breakout, this another dashed line here. So if the breakout occurs, this will be the first destination target, and if the market reaches this target, there should be some bounce here because this is really strong resistance for the market. This is the first possibility. Also note that the market is fighting now with the conference support zone on the monthly time frame after reaching the 127 ABCD agreement with the zone slightly below it. Okay, so the market is forming potential reversal pattern here right at the monthly conference support zone. On the second possibility will be in the case that if the inverted head and shoulders will be not break it to the upside, and it will probably lead to another leg to the downside, and in this case we can get here the falling wedge pattern that is also a bullish pattern. Usually the wedge pattern develops in the shape of a 5-wave pattern. Here we only have 3, as we can see here, 1, 2 and 3 waves. So if the breakout will not occur, we probably will have another leg to the downside that will lead the market to take out these lows here, and by this move market can reach as far as the yearly pivot support one at the 83 area. Also take a look that this potential move here is accompanied by the bullish divergence on the MACD indicator, as the market is forming lower lows on the price, but the indicator is forming higher highs. And this is very typical for the development of the wedge pattern, and it adds support and adds more confidence for this pattern if it will be forming, of course. But even if the breakout to the upside of the head and shoulders will occur, this bullish divergence is very good for the bullish perspective. Okay, so this is the second possibility for the medium term. Now shifting to the short-term analysis, let's take a look at the daily time frame, and here we can better see our head and shoulders pattern. Alright, in the blue lines. First we must say that the head is exactly at the 1618 extension of the left shoulder. That is very typical for the head and shoulders pattern, and market is right at the neckline at the current moment, and it has reached a very strong resistance area that consists of the conference resistance area, the K area on the daily time frame, the monthly pivot resistance one on the daily time frame, and also the previous highs that forms the neckline. So this is resistance, and also by this shadow here on the last trading session, market very probably has reached the daily overbought area, because as we can see here on the next chart, these were the overbought levels. Alright, and by this shadow here, market very probably has reached it. And if it's really the overbought, it's also the bearish stretch directional Napoli pattern, that is the combination of the overbought and strong fib level. And the minimum target of this pattern is the 0 of the trend oscillator. So as we can see here, we have potential bullish pattern, the inverted head and shoulders, but the breakout very probable will not occur at this moment. If it will occur, of course, and we can expect at least some minor balls to the downside here. Okay, on the other side, if the market will break this hard resistance to the upside, it will show how strong the market is. Okay, and it can lead the market directly to the targets specified on the weekly time frame. But now we can count on some at least minor moves. Also, it can be some complete reversal to the downside, because remember, we also have the possibility of the falling wedge pattern by taking out of these lows. So at the current moment, we cannot tell if it will be a true reversal or just minor bounce, but the market is giving us some hints on what can happen here. On the next chart, we can see that this blue line is the 25/5 MA, and this MA usually marks the trend. It usually marks the trend, and market has broken above it, tested it again, and continued the move to the upside. So this is a bullish signal on the market, because usually, as you can see previously, this MA is marking the trends. Also, we can see here that the trend has just shifted to bullish by the MACD indicator. On this next chart, we can see another bullish potential hint that the market can be forming this upward channel here. Okay, we have already 2 touches of this trend line, so this trend line is already valid. It will be support on the future, and market has just formed another bullish pattern here. That is the bullish flag, and market has just breaked it to the upside. And if we will estimate the classical target of this pattern, it will be the distance between the mast and the flag itself, counted by the upside at the point of breakout. And this target has not been reached yet, and if it will be reached, we can count on true breakout here of the inverted head and shoulders pattern. And as the market is at important resistance here, we can get some minor bounce here and later breakout to the upside for the reaching the target of this bullish flag. Also we can see here that the price action MA's framework have already turned to the bullish side, and this MA's framework usually marks the trend, so it's showing the bullish power on the market right now. Also, on the 4-hour time frame, we can see the weekly pivot points, and here we can have we are seeing another bullish hint, because the market has closed the week and the day above the weekly pivot resistance one. The pivot resistance one is the red lines, all right, and the market closed above it, and the resistance one usually marks the limit of the retracement when the market is in a downtrend, as it was previously. And by this breakout of the resistance one of the week, market is showing us some bullish potential. It shows that this can be not just a retracement, but this can be the start of a real uptrend. Okay, so we have strong resistance on the daily time frame. Minor bounce can come, but the market is showing us some bullish hints that this will be not the true reversal to the downside, but also pay attention that this can be the falling wedge. Okay, again, on the 4-hour time frame chart, we can see here the most important levels that we must watch for on the next trading sessions. Let's explain this. Here we have a nice thrust up that is totally contained by the 3x3 MA, that is this green line, and this up thrust is suitable for the Japanese directional patterns, and this can be either the bread and butter buy or the double repenetration signal sell, depending on how will the price action develop on the next few trading sessions or hours. Here we can see that if the market will reach this first fib support of the thrust, by the way, these are the fib levels for the thrust, okay, and not this one. So if the market during the 3 period closes below the 3x3 will reach important fib support level, this will be the bread and butter buy and can lead the market to some upward continuation, at least to the 618 resistance of the wall back move. So for example, the market can reach this fib support area by some gap at the opening or something like that, and this can be the bread and butter. On the other side, as the market is testing the first fib support, this also can turn to be some double repenetration sell signal, because if the market will close above the 3x3 and closes below again, this will trigger the double repo sell signal, and this can lead the market to deeper retracement after that, at least to the confluence support zone or to the 5th% level, and the 5th% level usually is the target for the double penetration signal. And maybe the market can even reach deeper level here that will be the most significant for us. Take a note here that on the first confluence support level we have the weekly pivot point for the current week that is around 1930, and also this is the previous tops here, so maybe this is a very nice area to take the long position with the stops beyond here, or maybe scale in by taking some small position here and taking the greater part here, because this is the most important one. And why I say that this level here is the most important for the current time, because this is the daily confluence support also. As you can see here, these fib levels are for this low of the daily time frame and from this low here, so this is the daily confluence support area, and also it will be the lower border of the potential upward channel that is forming on the daily time frame. So if the market will break below this zone here, it will tell that the market is really weak, and very probable the market will take out these lows here, and this will lead the formation of the falling wedge pattern. Okay, so these two areas are the most important ones to watch on the next few trading sessions. But there is some complication factor here that I have not shown yet. Let's come back to the daily time frame, and we can see here that we have this ABCD pattern in blue, and market has not quite reached the minor 618 extension of this pattern that stands exactly here. By just few pips, market has not tested it, and usually market does not leave behind important targets as this. So for example, the market can, instead of making double repenetration or bread and butter, it can turn directly to the upside by making maybe some butterfly here, reaching the target on the daily time frame, and only after that returning right back to the downside. So the price action behavior on these areas here will be very important for the development of the situation on Aussie dollar on the next few trading sessions. On the hourly time frame, I have some suggestion here. Here we can see that the market has formed the butterfly sail that leads the market to reversal from this area, and this was the 127 butterfly, and now maybe the market can be forming this ABCD pattern to the downside, okay, with the target around the first confluence support zone that was this one here, okay, and also the weekly pivot point, and also this area contains the 1618 ultimate target of this butterfly that is the extension of the whole butterfly counted to the downside. So if the market will reach this zone here, this will be a nice support zone, the weekly pivot point, confluence support, ultimate extension, and this can be nice zone to take the long position, because at least some minor bounce to the upside can come from here, and this will lead us, this will gives us opportunity to move the stop to the break even. Okay, I have put these arrows here to the upside to remember that as the market has untouched target of the daily time frame to the upside, maybe the market will not make this ABCD to the downside and will instead make some butterfly here to the upside, reaching the target prior to some downward reversal or minor bounce. Okay, and if the market will make the double repenetration signal here, okay, maybe we can have some deeper extension of this ABCD, for example, not 100% extension, but 1618 extension that will lead the market to deeper fib level of the zone here. Okay, that is also this one here. All right. Also take a look on this next chart. The reason that I think that some upward move may come, because here we can see the daily pivot points for the next trading session, and we have the daily pivot point above the market, so this gravitates the market to test it before any movement. Okay, so maybe the market can test the pivot point or the daily pivot resistance one, and only after that turn to some downside ABCD. Okay, and here we can see that on the same zone here, on the same conference support, we will have in the future the zone of the price action moving average of the hourly time frame. So if the market will make some ABCD here, this will add support, this MAs will add support to the zone. Okay, so this is the analysis. Pay attention mainly on this picture here, with these two levels being the most important ones to watch for on the next few trading sessions. If the market will break this level to the downside, it will probably lead to some deep retracement or even to the falling wedge pattern on the weekly time frame, and these two levels here can be used if you want to enter long on the market. Okay, that's the analysis. Thanks for watching.